Welcome to Explain the Charts, where we break down the news and the charts to give you a clear understanding of what's driving the markets. Today, October 15th, 2024, we're focusing on the USDCAD pair, a currency pair that has been making headlines lately. USDCAD, the US dollar against the Canadian dollar, has been experiencing an uptrend in recent weeks, largely due to the strength of the US dollar. The U.S. Federal Reserve's more cautious stance on interest rate cuts, following strong U.S. economic data and higher-than-expected inflation, has been boosting the dollar. Meanwhile, the Canadian dollar has been struggling as concerns about Chinese oil demand and eased supply worries after Israel's statement regarding a possible strike on Iran have been weighing on oil prices. As a major exporter of oil, Canada's currency is closely tied to oil prices, and a decline in oil prices is generally bearish for the Canadian dollar. Furthermore, the upcoming Canadian inflation data is expected to show a drop, potentially increasing bets for Bank of Canada rate cuts and further weakening the CD. Now, let's shift our focus to the charts to see what the technical indicators are telling us. Looking at the daily chart of USDCAD, we see a strong uptrend that started a few weeks ago. The price has broken through several resistance levels, suggesting strong bullish momentum. The recent surge in the US dollar, fueled by the Fed's cautious approach to interest rate cuts, is clearly visible on the daily chart. If we look at the past few weeks, the USDCAD pair has been consistently making higher highs and higher lows, confirming the uptrend. This upward trend is reinforced by the positive momentum indicators, such as the Relative Strength Index, RSI, and the Moving Average Convergence Divergence, MACD. The RSI is currently above 70, suggesting overbought conditions, indicating a potential for a short-term pullback or correction. However, the MCD is still trending upwards, indicating a bullish bias in the longer term. This suggests that the bullish momentum might be strong enough to overcome any short-term retracements. Let's zoom in on the 1-hour chart to get a better understanding of the short-term price action. On the 1-hour chart, we see a more volatile price movement, with some sharp upswings and downswings. The price has been testing resistance levels around 1.3800, which was previously a strong support level. However, the bulls have been able to push through this resistance, indicating strong buying pressure. Looking at the recent candles, we can see a series of bullish candlesticks, such as the hammer and the engulfing pattern, suggesting that buyers are in control. These bullish candlesticks are forming after periods of consolidation, which indicates that the bulls are accumulating strength before pushing the price higher. Finally, let's take a look at the 15-minute chart to get a sense of the very short-term price movement. The 15-minute chart is much more volatile and unpredictable than the daily or hourly charts. It's primarily used by scalpers and day traders who are looking to capitalize on short-term price swings. This time frame can be very noisy and full of false signals, so it's important to use other indicators and confirmation before entering any trade. On the 15-minute chart, we can see that the price is currently trading near a resistance level, but there are signs that the bulls are pushing through. This suggests that there might be some short-term buying opportunities, but it's important to be cautious and manage your risk carefully. So, what are the key price levels to watch for in the USDCAD pair? On the daily chart, the 1.3700 level has been a strong support level in the past, but the price has now broken through it. This suggests that the 1.3700 level might become a resistance level in the future. On the hourly chart, the 1.3800 level has acted as both support and resistance in the past, but it now appears to be a resistance level. If the bulls can push through this level, it could open the door for further gains in the short term. On the 15-minute chart, the current price level of 1.3800 is a key resistance level to watch. If the price can break through this level, it could signal a continuation of the bullish trend in the very short term. In conclusion, USDCAD is currently in a bullish trend, driven by the strength of the US dollar and concerns about the Canadian economy. The daily chart shows a strong uptrend with positive momentum indicators, suggesting a bullish bias in the longer term. However, overbought conditions on the daily chart might lead to a short-term pullback or correction. The 1-hour chart shows signs of strong buying pressure, with the price testing resistance levels around 1.3800. If the bulls can break through this level, it could open the door for further gains in the short term. The 15-minute chart is more volatile, but it shows signs of short-term buying opportunities. It's important to be cautious and manage your risk carefully when trading on this time frame. Key price levels to watch include the 1.3700 level on the daily chart, the 1.3800 level on the hourly chart, and the current price level of 1.3800 on the 15-minute chart. The USDCAD pair is likely to continue its upward trend in the near term, but a pullback or correction is also possible. Conditions that could reinforce the bullish trend include continued strength in the US dollar, weak Canadian economic data, and rising oil prices. On the other hand, a decline in oil prices, a surprise improvement in Canadian economic data, or a change in the Fed's monetary policy stance could weaken the USDCAD pair and lead to a reversal of the current trend. Overall, the USDCAD pair is an interesting pair to watch, with potential trading opportunities for both long-term and short-term traders. As always, it's important to do your own research, manage your risk carefully, and never invest more than you can afford to lose.